£20,000. That is how much money I set aside to invest in my 2021 stocks and shares ISA. Stick around because in this video, I'm going to be sharing exactly why I've done this. Hi, my name's Jay Campbell and welcome to the Maximize Your Money channel. If you're somebody that likes to make, manage or multiply your money, then you are in the perfect place. If you haven't already, go ahead and hit the subscribe button and let's go right into the video. So the first thing that we're going to cover is exactly why I'm choosing a stocks and shares ISA for my investments. And then secondly, we'll be covering exactly why £20,000 is the exact amount that I've set aside to invest for 2021. So full disclaimer before we can get started, I'm not a financial advisor and nothing in this video is financial advice. Everything is just my own opinion and you should always seek professional financial advice for your own investment decisions. So why stocks and shares ISA? Where I'm from here in the UK, especially in England, we are fortunate enough to be able to have this stocks and share ISA that allows us to invest up to a threshold each year, and any gains that we make or profit from the investments that go up in value or the dividends that we receive, we don't have to pay any tax on our actual gains. And that is always a dream. 100% of what we make goes into our pocket, and that is something that I will take advantage of every single day. When it comes to things like income taxes and VAT, we have to pay our taxes in lots of other ways, so it's nice just to be able to take a full amount of our own profits when it comes to our actual earnings from our investments. And that's great because the money that we're putting into these investments, they are capital that we have at risk. So it's great to be able to put our capital at risk and take 100% of the reward for that. Personally, for my stocks and shares ISA, the broker that I use is Vanguard. I really like Vanguard because they have extremely low fees, and also I really like the company's philosophy. Their founder, Jack Bogle, I think he was just a fantastic guy. He's got a really good book called Common Sense Investing, which is a book that I absolutely love as well. And it's essentially just going to mean that with those low fees, all the profits that I do make from these investments, I'm going to take as much of that as possible and not have them eaten up in management fees or other fees that come with actually being a part of a broker account. So in terms of the £20,000 and why I'm investing £20,000 for 2021, specifically the tax-free allowance is £20,000. And especially in my broker account, it doesn't even let me add an extra like £1 or penny more on my Vanguard account. So for example, I maxed it out for the current tax year and I'm not able to invest any more. So that is why I am doing the same again for 2021. If 100% of this is tax-free, then of course I'm going to take advantage of this, which leads me into the next point. That £20,000 right now is sitting in a savings account, and that savings account is, of course, as you might know, has really low interest fees. Actually, at the moment, with the current portfolio that I have for my Vanguard funds, the total funds have a track record over the last 10 years of giving an annual average percentage of 10.31%. That is absolutely miles better than anything that I would get in an interest account, and certainly far better than what I've got in my actual savings account at the moment, which are just ridiculously low. Like, it's actually embarrassing. Now, just to point out here, the 10.31% that is averaged over the last 10 years, that is by no means to say that over the next 10 years, the next 20 years, 30 years, 40 years, that they are going to get the exact same results. And past performance is not an indication of future performance. However, it gives a good idea of what is the potential of the fund by just looking at what it actually has done. So that is the basis of reasoning. We're going to assume in this scenario of looking at why I'm actually investing this £20,000 into the stocks and share ISA with my portfolio, as to why that is a good idea in this situation based on the past performance and how that might look out for the next few decades. Are you still watching? And some of the reasons for this is that if we are to look at something called compound interest, with compound interest, if we are just to take this £20,000 and we're just going to say it's £20,000 and put it into a compound interest calculator at the rate of 10.31% per year over the next 42 years. And if you're wondering why 42 years, at the moment I'm currently 23. The average retirement age is around 65. And let's just say by the time that I retire, I will just be able to see this money grow in this proportion of 10.31% a year up to the total balance. So if you're interested to see what the numbers are, stay with me. I'm going to go through that with you right now. So as you can see here, we start with an initial balance of £20,000. 10.31% per year is the interest rate, and we do that over 42 years. So we are not going to add anything else to this £20,000. And when we do the math, after 42 years, the total investment value, assuming that we get the historical rate of return over the last 10 years, is £1.49 million. That's basically £1.5 million. Now, some of you might be wondering, why would you want to wait 42 years to put £20,000 away? Well, hopefully just seeing the return that you have just then based on historical data would indicate that that might be a good decision for me. I have zero need to use that £20,000. This money that is in the market is just setting myself up for the future later on. If, for example, I get to 40 years old and I want to withdraw that money to, let's say, buy a house in cash, then of course I could do, but I'd rather just wait it out and, you know, just live from all the income that I get day to day anyway. So that is really a key point in my situation as to why I'm happy to wait. Also, of course, I'm going to be adding to this every single year as well. And with that being said, the more that you add, the more that your pot grows, the more interest that you're able to make. And of course, this whole big ball just gets bigger and bigger and bigger. So that is something as well that is really, really a good bonus to kind of say that it's not just something that you have to like just do one time. You can keep adding to the pot to grow it and grow it and grow it, so that hopefully you can have a massive, massive nest egg when you are coming to retire, if that's the case in your situation. So that is exactly why I will be investing £20,000 into my stocks and shares ISA next year. Of course, I'll be maxing the whole thing out, as you guys know. That is a goal that I'm going to set for myself every single year. And I'd love to know what you guys think about this long-term approach to investing. Is it something that you would want to do yourself? Do you invest for the long term? And what are some of the ways that you do like to invest? If you found this video really interesting, then go ahead, hit the subscribe button and also like the video. And of course, turn on notifications, because I'm going to be sharing 2 videos every single week on how to make, manage and multiply your money. So for now, that is everything. And I just want to say, see you in the next one.